Hello and welcome to this edition of TMA's Farm Margin Talk. This is Devin Schierling, Grain Marketing Manager for TMA. Well, growing up, my parents always taught me when I was learning how to hit a baseball to make sure I kept my eye on the ball and focus and watch the ball all the way till it hit the bat. And I think that lesson goes directly to our agriculture and commodity markets right now. We need to make sure that we stay focused amidst all of the weather concerns, the financial outlook concerns in Europe, or the man financial bankruptcy. Between all these different distractions that we have, we need to make sure we keep our eye on the ball and focus on farm profitability. So as we look at our farm margin index for November 4th, 2011, you'll notice very little change except for in wheat on the week, because we had a volatile week of pricing moves, but at the end of the day, our profitability remained relatively flat on the week, and the same profitability goes out for the 2013 crops as well. So as we look at the individual details, this just shows you the information that we use to come up with our farm margin report, and this goes back to the number of bushels it takes, since remember that the grain is our commodity or our currency when it comes to profitability. So as we talked about keeping our focus, I wanted to bring us up to date on where we're at from a historical perspective. So if you look at dryland corn trading over $130 an acre of profitability, or potential profitability I should say, today, you can look and see what that looks like over time based on this graph that goes from September the 4th, 2007 to the close of market today. But what does that mean? Well, that means that we are trading somewhere north of 80% of the time you have not been able to sell grain at these type of profitable levels. So it helps put things into perspective. We're only 20% of the time, since 2007 or 2006 crop year, we've been able to hit these type of levels. So what are some of the things pushing our marketplace right now? Well, weather's huge. Whether it be talk of dryness in Iowa, or just here in Kansas and throughout the Central Plains, this graph is something that we've all been looking forward to seeing, and that's the potential rainfall that we're looking at for this upcoming week. So hopefully that yellow bar of 2 to 4 inches slides a little bit further west, but gives us adequate moisture going into the dormancy period for our winter wheat crop, which is looking phenomenal right now for the conditions that we've seen. So when we talk about wheat, we look at a graph here that shows the last 4 crop years. So it shows 08 through 2012. In the dark red line right there in the middle is the 2012 crop year. And you can see really since the middle of September, we've been trading in an absolute flat line. We've had some ups and downs, but we've been trading flat. And at one point in time, usually about that November time frame, we seem to hit that magical mark of knowing what the crop looks like, conditions, and we seem to either go up or go down, and that's where we're at right now. So keeping your eye on the ball and knowing what your profit goal is important right now. So look at different risk management strategies, whether that's putting floors in the marketplaces, having scaled up selling approaches through offers, or using the TMA Rally Catcher contract. These are all things that we need to be looking at to make sure that your profitability for your 2012 wheat crop is strong going out in the future. And so what does that mean? Well, these profitability levels, this just shows you where we're at once again. So less than 30% of the time today, you've been able to sell your wheat at these type of profit levels. So what's going to move our margin going forward? Well, once again, it focuses around the financials. So the man financial challenge will continue to weigh on this marketplace as people are maneuvering and changing their positions. What's going to happen overseas with Greece? The USDA report that'll come out on Wednesday. Most of the private analysts have came out with their different opinions of where they're going to see the national average corn yield as well as the overall production. So we'll see where we fall if the USDA provides us with any different numbers than what the industry was expecting. And then weather, moisture is key. When you hear dryness up through Iowa, that tells us that we need rain within our territory to maintain optimal growing conditions for the upcoming years. With that being said, folks, have a wonderful weekend, and we will talk to you next week. For more additional information, contact your TMA grain marketing or crop insurance specialist. Thank you.